Okay, cool.
or
So
from
yeah, we won't
friend.
hold you too long. We'll just get started. Like maybe if you wanted to like introduce yourself and yeah, if you wanted to introduce yourself and maybe give the community a rundown of what you do with Tokemak.
Sounds great. So, quick introduction. I'm LiquidityWizard, also known as Carson. I'm pseudonymous, so you'll see me as both out in the community. Founder of Tokemak. For those that don't know, and I'm sure there's probably a mix of people on this chat that have no idea what Tokemak does, and then some that are probably deep on it. It's a pretty deep rabbit hole, so don't feel like discouraged or anything if you are half lost on this call. Like, happy to come back, and there's quite a few good Medium articles that can kind of get you acclimated to how all this works. So, in a nutshell, Tokemak is a decentralized liquidity provider or decentralized market maker. It essentially is building a unified liquidity layer that sits above exchanges. So we're not an exchange. We never trade through Tokemak, but rather it basically crowdsources tokens or capital from liquidity providers. We then have participants called liquidity directors that hold our native token called TOKE, and some people pronounce it TOKE or TOKE. They direct the liquidity around to wherever it's needed across DeFi. So, for example, they could say, "Hey, we want to see more butterfly liquidity on SushiSwap," as an example. And effectively, the pro rata split of where all of those votes go controls where all of the liquidity is routed. Plus, there's an impact on the actual emissions of TOKE. So you're sort of playing this game, for those of you that are familiar with how the convex and curve ecosystem. It's actually in a lot of ways even more dynamic than that, where you're controlling not only the sourcing of capital via directing emissions, but then the holders of the TOKE are also routing liquidity wherever it's needed across the ecosystem.
Yeah, dope. So I mean, you brought it up like convex and curve. Like obviously, when this project first started, there was, I'd say, like a big focus on curve and convex, but obviously, it makes sense for us to diversify, which is why we made this move with Votemak. Um, and I guess like I think like one of the questions that was like popping up like with the acquisition and stuff is sort of like how does the token wars compare to something like the curve wars, and not really from like a monetary standpoint, but more like what are people really bribing with Tokemak?
Yeah, it's a great question. So I think when we built Tokemak, we were thinking mostly in terms of like governance and project tokens, starting this sort of what we're now calling the Token Wars, but this sort of liquidity arms race, where there's strong demand for Token and for the governance power, or really liquidity directing power that it has. Also, there's a huge demand for it from the exchange side. So you can imagine the venues want to direct more liquidity to themselves. So SushiSwap or Uniswap want more liquidity, which means a tighter spread or better pricing, which means more trading volume, which means more fees they're generating. So you already have these sort of many different groups sort of across the ecosystem that need TOKE. And I think talking to any DAO, they would tell you one of the biggest things that are on most of the founders' mind is how to secure liquidity for their tokens. What wasn't apparent from the very beginning, but which sort of became much more apparent to me in November, December timeframe, was how powerful this is for stable coins, or what we call pair assets. So for those of you familiar with the curve wars, and where Redacted was very much out on the kind of forefront of this, seeing like, hey, let's go and acquire CBX, CRV type voting power. That's going to be at a premium. You can use the bribes. That's sort of a natural evolution from the convex curve utility, which is really stabilization of stable coins. So if you look and you see why the curve wars are happening in the first place, it's largely driven from stablecoin projects that first and foremost need to hold a peg. So they incentivize the emissions into these underlying pools on curve, excuse me, so that they're able to hold the peg with respect to the other stables. That's sort of table stakes, or phase one, that stablecoins need. Phase two is it's not good enough just to have something that holds its peg. You then also need adoption of it, or really utility across DeFi, and that's where Tokemak comes in. So the evolution from curve wars into the Token wars are really as stable coins. It's much broader than stable coins because, as I mentioned before, exchanges and governance tokens also need Token. They also need liquidity or utility, but the stable coins are going to naturally evolve from the curve wars into Token wars, and the curve wars will persist. So Redacted is in a unique position here, I think, where you're acquiring that and TOKE, which will serve you well to go after both of these things. Because again, all stable coins will need both stability, which they get from the curve wars, and utility in the form of liquidity or sort of utilization across DeFi, which they will get from the TOKE wars from TOKE.
Yeah, for sure. And like with Tokemak, right? Like you have sort of like these core events that are going on right now, but eventually there's going to be like permissionless reactors, right? So what kind of changes as like this transition to like being fully launched and launching permissionless reactors would like sort of hold in store for like how people are like bribing, I guess, like token holders?
Yep. So it'll be very interesting to watch sort of as Votemak evolves with the new functionalities that will be added to Tokemak. So initially, as Sammy said, we've got we had these events called core, and if none of you, some of you haven't seen those or participated in them, they were effectively the events that determined which tokens got the next reactors or effectively the next liquidity from Tokemak, and of course the rewards therein where their project token holders could stake and earn more tokens. So right now there's I think 9 reactors live on the site, plus on the token reactor side, and like 7 or 8 pair reactors that are stable coins largely and ETH. Going forward, as Sammy said, we're going to move to permissionless reactors. So instead of us picking like a group of 40 or 50 projects like we did in the which is admittedly arbitrary, right? In the past events, we now will just have the ability where anyone could drop a token hash in and sort of put it as a candidate up for ignition or for turning that reactor on. In that world, TOKE, essentially governance power, is still going to be required to initialize that reactor. And so I anticipate that the demand for TOKE and therefore the functionality that can be implemented in the bribing mechanics that can be built in at Votemak to get even more interesting as we go to permissionless reactors. Now it goes from something that's sort of event driven and that's determined, frankly, by when the core team decides to run the next core event, to something that's much more community driven, real time, and sort of all on, where you can generate incentives or bribes on top of the TOKE governance power. Additionally, and I know we're throwing a lot at you, one other really interesting thing that actually is for the ongoing reactors then that are on is they're always playing this sort of game of stabilization. So this is much more like the curve gauge weight votes, where right now Votium is being used for bribes or incentives that are built on top of the curve convex ecosystem. Within this space, Votemak could be used basically to add additional incentives where projects could bribe for votes to direct more TOKE governance to a given token, and which would therefore attract more TVL and thereby enable Tokemak to deploy more of that token's liquidity across DeFi. So I think that Votemak's power is going to only increase, and there'll be a lot more interesting. Like it was already very interesting with the core votes and had great utilization, and I think it's only just beginning on sort of how that will be able to work and how that can support the Tokemak ecosystem.
Yeah, for sure. So I think like just to like clarify for everyone, like it was really like an interesting opportunity for us to like explore, right? Because what happens is, originally like you could look at Votemak as something that's like very similar to Votium in the sense that like, whenever there's an event, people delegate their tokens to us and then we find like the highest return, something like that, right? But what happens with like the evolution of Tokemak and it's sort of moving to these permissionless reactors is it can actually become somewhat of like this passive income machine where projects are constantly going to need to basically put up bribes and put up rewards so that they can point like the liquidity towards their token, right? And as the amount of like reactors grow, it only becomes more favorable like for us, right? Obviously, one thing that was like important in the tweet was that we're not really out to do like anything malicious with this and extract as much value out of Tokemak as possible from this. One of the things we did was bring on Wiz as sort of like an advisor to how this is going to go down, and he's going to help like sort of oversee like the operations to make sure it's in line with everything that is going on with Tokemak. Maybe you want to talk about like some of the things that you could see as like concerns and like why you think it's like important to help advise on how we like run Votemak.
Yeah, absolutely. And Sammy, as I said before, really appreciate the offer to have me be plugged into this as an advisor, help with oversight, and excited to be plugged in with the Redacted community broadly and as well as Votemak. So, as you were saying, I think that it's a perfect analogy, really. And it really is almost perfect that Votemak is to Tokemak as Vodium is to the curve and convex ecosystem. And for any of you that are deep on the curve wars, every project that has a stake in the curve wars is basically using Vodium. So that kind of shows the potential here for what's going to happen with Votemak. And I think, as Sammy was saying, the important thing is we'll be working together to make sure that not only this is good for Votemak, but also Tokemak. And the way that will sort of work is we want to make sure that we sort of encompass. It's important with how the balancing equations work within Tokemak that we sort of know the all-in incentives for an individual reactor. So this is one of those really interesting cases in the space where, with financial Legos, where it's like, had Votemak not come along and built this, and then I think fallen into the hands of Redacted here, where I think we'll be able to build some really interesting features on top. We probably would have at some point in the future built something like this, where different projects could come and deposit additional of their own tokens, or really any tokens in. It's always better if you can partner on stuff versus build it yourself. So I'm super happy that this exists out there now. All it means for us is that we need to basically complete the feedback loop where users of Votemak are going to be looking at Tokemak to see sort of what the state of things, and then put incentives or bribes accordingly at the Votemak level. We need to then sort of fold those into our equation so that they sort of reflect that in real time. So it would then see, okay, cool, there's this much TOKE emissions or TOKE rewards down on like the base Tokemak level, plus we have 100 ABC tokens that are bribed to this reactor up on the Votemak level. And the reason that's important is that we'll just make sure that the system is operating at peak efficiency, because it's properly then reflecting that in sort of the all-in APR of the individuals. And that'll keep everything kind of tightly coupled between Tokemak and Votemak. So going to be very interesting. And I think that's, again, another good reason where being tightly joined at the hip with the Redacted community and being able to make sure that we understand kind of the inputs and outputs, like just like Votemak has to understand the inputs, outputs of Tokemak, we'll have to understand that for Votemak to make sure we can reflect that then in our system and make sure it operates at peak efficiency, which will be good for all holders, Tokemak as well as Votemak and Redacted.
Yeah, for sure. Maybe like it would be good to talk a bit about like what's like next in store for like Tokemak in general, right? So obviously, like the plan right now is to direct liquidity to between like Uniswap and SushiSwap. But what else are you guys looking at in terms of like maybe like other chains or other DEXes?
Yeah, absolutely. So we're going to be, I think exchange voting is going live later this week, which will be a super exciting major milestone for us. There's a little bit of alpha in here. I don't think we've announced that really broadly. That's going to be the first time that users are able to see the next level of essentially TOKE governance. This will be very interesting to you, Sammy, I think, and to Votemak, because this will show not only can you move your tokens, basically vote them in real time around to the different reactors, you can also then within a given reactor say that you want to see ABC token on Uniswap, for example. So people are going to start getting familiar with that mechanic. Then liquidity deployment will actually start happening over the next couple of weeks. As you said, we'll have SushiSwap, Uniswap, Balancer, 0x, although 0x will take a little bit longer because you actually have to have a network of pricers for that, since it doesn't just price on an AMM. It's a little, excuse me, a little more complicated. And then we're also going to be bringing in curves. So this gets a little bit meta. And for any of you on the call that aren't deep on Tokemak, I'll keep this brief. Don't worry if I lose you here. There's going to be curve support, not only for the pair reactors where you have stables where you'd naturally think about parking those in curve, but also the way Tokemak works is liquidity providers get back a T version of the asset. So if any of you are familiar with Aave and you get back A assets, it's a little bit like that. Put in Butterfly, where I'm sure down the road we'll have a Butterfly reactor, you'd get back T Butterfly. And so what's going to happen is we're going to be establishing liquidity also into curve for the T asset versus the standard asset, which gives holders the ability to sort of get in and out in real time in a real market from the Tokemak T assets back to the base liquidity assets. So that's coming shortly. And then we're going to be quickly expanding into other layers as well. So I think hopefully late this month, but for sure within the next 3-4 weeks, we're going to have our first L2 integration, and we'll be going pretty much to all of the different all of the different L2s as well as relevant base layers quite quickly as well. So Q1 is going to be a pretty crazy continuous expansion. And we'll be just connecting into more chains, and of course all of the relevant DEXes within any given layer as we connect into them.
Yeah. So I mean, the curve integration is definitely like very interesting for us, right? Because one path that we're looking at now is sort of like how we can leverage other tokens like LP assets, right? And what might be like a really interesting path forward for us is sort of looking at if protocols bribe us in their T tokens, right? In their T assets, how we can leverage those to sort of like, even further bolster like the Tokemak community, right? And what'll happen in the near future, like as we sort of build out the integration, as we keep on building out like our protocol, our staking, convex, and curve, is eventually Toke bonds will be live, right? Obviously subject to like a governance vote, but I think everyone's on page with like bringing on Toke bonds. It would be like, obviously we know the value in bringing on Toke bonds. From a bribe perspective, it would work similar to how it works with like convex and stuff like that. But I guess it would be cool to hear like your sort of thought on why it might be beneficial to bond Toke on top of like integrating something like Votemak.
Yeah, absolutely. The compounding effects here are going to be pretty insane. So I'll give you a couple examples. And actually, before I even say that, I'll say something interesting about that's probably a way people haven't really thought about the Curve convex ecosystem, or for any of you, if you're familiar with the Frax ecosystem and how they use the vote escrow system with FXS. You can kind of think of, because we don't formally use the vote lock, we might be using that down in the future, but we did basically a brand new design. But there's a lot of mapping sort of to that system, even though we sort of built in parallel and weren't sort of copying that same ecosystem. But you can kind of think of Curve as a system. The entire sort of Curve gauge system is a system set up to control where liquidity goes by controlling emissions, but it's always locked to the confines or locked to the jail of the Curve platform, the Curve exchange. Meanwhile, for those of you familiar with Frax, if you've gone down that rabbit hole, very analogous system, very cool stuff that they're doing, but now it's restricted to pools that have Frax in them. So that's sort of locked to a different jail. That's locked into sort of the restriction of you can direct emissions and therefore direct liquidity to any pools that have Frax in it. Both very cool ideas, and both I think will be very powerful. Tokemak, if you think about how TOKE works, that's where you can control liquidity by controlling emissions to any pool anywhere. So it's really generalized liquidity. It's not restricted to a single asset. It's not restricted to a single venue. So if you think about the compounding effects, especially then for a protocol like Redacted, where you are stockpiling Curve convex power and stockpiling TOKE power, you can use both of those to sort of accomplish sort of optimization in terms of the yields or the flows that are going back to the protocol. Now, coming back to sort of this concept of if you use bonds for the T assets, or if you use your own treasury sort of as liquidity provider, all of these things, at least in the early innings, we're incentivizing with TOKE. We want to continue to decentralize Tokemak, so get TOKE into more hands. And of course, we want to build up TVL and we want to build up liquidity. So what that means is if you provide assets as a liquidity provider, you'll be stockpiling more TOKE. You can then fold that over in as a liquidity director. So you can be getting sort of the raw yields, plus you could have people bribing on top. So you're earning both additional TOKE plus whatever additional bribes. Meanwhile, since you have the Votemak system, you'll be able to sort of control that ecosystem, as well as sort of how the economics flow there. So really interesting ways that all of these things sort of compound. LP side and TOKE side both will get more TOKE, which you can then flow back into TOKE plus bribes. It gets pretty powerful.
Yeah, definitely. And you touched on it like briefly there, right? So right now there's no vote lock TOKE, right? And the way it sort of works is like pretty unique in the sense that it's actually like gasless governance, right? Maybe you can explain a bit like how like that all works and how you guys are sort of looking at like governance as a whole.
Yeah, absolutely. So when we were architecting Tokemak, we sort of think of we kind of jokingly internally call this all governance on steroids, but I think it's somewhat true. So we sort of looked at different things that were out there. At the time that we were building it, it was the moment that gas was going insane on Ethereum L1, and we said, okay, we first and foremost, if we have a protocol that routes liquidity from users and protocols' hands as they deposit tokens all the way through like our system of manager contracts down to the end venues, Uniswap, SushiSwap, Curve. We can't have the user paying gas for all of that. So I've seen plenty of like really innovative, really cool protocols where a user has to pay $400 to $2,000 of gas, and like I've gladly paid that bill for research purposes, but I have realized that's broken. And obviously, there's plenty of things off of Ethereum L1 that that should hopefully improve this, but that was very top of mind when we built this. And so what we said was, let's make sure that when users deposit LP, deposit as an LP or stake token, that they're always just sort of interacting with the base, like the surface layer contract. So it's as cheap, even though albeit being on L1, it's as cheap as possible. Then if they've staked TOKE, let's make their effectively movement of TOKE, which is really their governance votes using the TOKE, let's make that be as cheap as possible so that they can effectively just sign with their wallet in order to sort of move their TOKE governance around in real time based on the APRs that are moving around on the dashboard in real time. Same thing's going to happen with the exchange. So you're basically getting 2 layers of governance once you've staked your token, and all of those are just signatures, and you can change as many of those parameters as you want. Then just do one signature, and effectively we are storing that then initially up on Matic. We're storing it up on there. Tokemak handles the gas. That, of course, is cheap, but it effectively is being routed through an API there. So it's still, everyone can make sure that everything was properly accounted for and it is committed to the chain. But that was sort of the way that we minimized gas and made sure the experience wasn't broken for shrimps, even though it's on L1. And of course, if we expand to L2s, that will get even better, where it's even cheaper, because I know to small holders, even a light gas transaction on Ethereum L1 can still be pretty painful.
Yeah, definitely. I know you have to bounce soon, so I won't keep you too long. Maybe last 1 or 2 questions, unless anyone in the community has anything to ask. I guess, yeah, like you bring up like L2, like with governance, like you're expanding to L2 and stuff like that. Obviously, like one thing like our community wants is to become like less attached to mainnet, right? Sort of like expanding out. And I guess like one of the things we've been looking at like in our first like L2 expansion is something like DOPEX, right? Where we're not even really looking at like DEX liquidity anymore, but we're looking at the value of like potential like derivatives platforms and stuff that operate on something that like like derivatives platforms haven't really succeeded until now, because obviously there's like scalable solutions out now that are functioning. What are you guys like ever thinking about like expanding beyond DEXs? Like how would reactors work for things where they're not really providing liquidity to a DEX, and maybe to like a derivatives platform or lending platform?
Yeah, it's a great question. So the interesting thing is, I think we kind of did the hard thing first. So we're definitely thinking about how this could be used beyond just what we call like generalized trading liquidity, where right now we're always depositing it into venues where you can trade from token A into token B, right? We're first trying to stand up that liquidity. We want to basically tighten down the spreads and make it much better for trading, which in here doesn't just matter for traders. It matters for all users and protocols that are coming in and out of these tokens for whatever reason. So that's sort of phase 1. But as you were saying, we'll just use lending protocols as an example, right? A lot of our logic we can actually bypass if you're, for example, depositing into fuse pools or into Aave or something like that, because those are taking just sort of single-sided deposits in most cases, right? A lot easier to go into, don't have to do sort of a coordination between 2 different pools and deploying, and then deal with all of the quantity movements and impermanent loss. So in general, quite a bit simpler. We'll definitely be going to that. We'll probably be putting that to governance to determine sort of when to expand into it, because it's sort of this other dimension to the platform, and we want to do it when the community thinks is right to go to that. Derivatives are definitely something we've been thinking about, and for us, similarly, it ends up being it works pretty well in how we've architected this, because now instead of just moving the underlying like you would in basically pre-funded spot, where you have to put both in, you're putting whatever effectively margin tokens in, which might be ETH or might be a stable coin or whatever. And then you plug in what we call pricers on our platform. And this is getting down the rabbit hole, but that's a whole nother participant that we'll be adding this year, which is for any of those protocols where you do need a third-party pricer to plug in. So long-winded way of saying we definitely do want to go to derivatives sort of after we've entrenched ourselves within the spot market, as well as lending protocols, and really any spot that tokens could be utilized, I think, is where we go eventually. We'll just like lean on our community to sort of tell us when to open up the floodgate to that and the next sort of tranche of venues that we could direct liquidity to.
Perfect. So one community question from Jason before you have to go. Where do you imagine membrane fit with the long-term plans within the long-term plans, and how can the partnership with Olympus and Redacted fit within that or with other plans? Ultimately, how can they create a mutually beneficial relationship with Tokemak to help build with each other?
Yeah, great question. So I'll quick hit on membrane, and then I'll hit on Olympus and Redacted. So membrane's interesting for some of you on the calls. That word probably means nothing, and for other of you, you're probably speculating wildly on when there's going to be the token and all this. This is basically a sister project to Tokemak that is solely focused on OTC trading and lending. It's going to be super interesting and enable users to basically interact with OTC markets and bespoke lending with the same ease that they do to most sort of standard DeFi protocols. So that's going to be coming very soon. We're going to have a lot of announcements on that pretty soon, but I'll just give you sort of, since we're talking on the Tokemak side, where the linkages sort of fit in. So eventually, even though it's a very different flavor venue than any of the things that are out there right now in DeFi, that can be added as a recipient liquidity venue from Tokemak. So eventually, membrane can be a spot where liquidity from Tokemak can also be directed. So that's one way that sort of Tokemak can feed into membrane. In reverse, membrane is an interesting conduit that will likely get a lot of additional capital into the DeFi ecosystem. And so we also anticipate that there will probably be ways that we can flow capital sort of from the conduit that is membrane into Tokemak in the first place. And there's one other really crazy use case of the actual brain token. Now we're really giving out alpha here. The brain token, if TOKE is basically a liquidity layer, or is enabling a unified liquidity layer, then Brain is going to is going to enable a unified credit layer. So the Brain token is actually going to stand as the ability for a desk, an individual, whomever, to represent that they are credit worthy within the blockchain, and that will enable many things both within the membrane ecosystem, as well as we know sort of how to plug that in on the Tokemak ecosystem with pricers and many other things across DeFi. So that was further down the rabbit hole than I meant to go there, but there's very interesting things coming with membrane that will help support all of this. A lot more on that soon. On the Redacted and Olympus side, I think some really interesting things will be coming. So one, obviously, I think the initialization of the Votemak acquisition is great. I think that's going to sort of join us at the hips in a lot of ways. We're already very good friends with the Olympus community. I talk with Zeus and Jala and co quite frequently, usually every week or two. And we've got some really interesting things we're looking at in terms of where we could direct liquidity there. We're also planning additional alpha here. We're planning to elevate Ohm, likely in the form of G-Ohm, to a pair reactor, probably very soon. So keep an eye out for that. And so really, I think the way that Tokemak can be most helpful to the Redacted and the Olympus community is just helping to entrench liquidity for Ohm and for friendly projects sort of across the ecosystem, and make sure that that users are where it's as frictionless as possible for users to get in and out of Ohm, and really increase the liquidity bandwidth for Olympus and Olympus rate related projects across DeFi.
Yeah, perfect answer. So I know you have to go, so I'll let you head out if you want to say anything. Plug Tokemak or whatever you want to do before you have to dip.
Sounds great. Yeah, sorry that I have to jump. Happy to come back anytime if the community is like very confused about any pieces. Tokemak's a deep rabbit hole. I think all of you are probably gigabrains, because if you're in Redacted, it means you'll understand the broad Olympus ecosystem, which is an equally deep rabbit hole. But yeah, head over to tokemak.xyz sometime if you want to see the available yields out there. The easiest way to sort of get started is just look us up on Medium to read some info there. There's some good long form threads out there, especially by Sterling Archer on if you're one to just read a Twitter thread instead of a Medium post, check out Sterling Archer. He's got some good long form ones that sort of explain how everything works. And yeah, happy to come back anytime. Love the Redacted community, and excited that you've acquired Votemak. I think there'll be a lot of things we'll be able to do together.
Dope. Let's do it. I'll let you head out. I'll just wrap up here.
Awesome. Thanks, Sammy. Appreciate it, everyone. Thank you.
Later. Yeah, guys, so that was it. It was just a quick 30-minute call. It was recorded if you jumped in late or something like that. Hopefully it gave you guys a bit more insight as to like why we think it's like a strategic decision to acquire Votemak, and I think it puts us in like a really good place beyond obviously like the Toke bonds will launch eventually. But I think being on something like Votemak, which is sort of like this layer on top of Tokemak, we can plug into all the different things that Carson was talking about. And sort of let us be at the forefront of like how liquidity is moving across DeFi, which is really the end goal, right? I'll wrap up here. Really, just a short call. We'll post the recording right after this, and yeah, everyone, thanks for joining.